We live? Oh, welcome to the Better Than Bitcoin podcast, where I talk about the future of money. Today, I will talk about a few newsworthy events that went on over the past week in relation to Bitcoin and other cryptocurrencies. Before I dive into my first subject, I feel like I should introduce myself since this is my first episode of the podcast. My name is Jamie Dabauskas. I'm 18 years old. I'm currently attending the University of Maryland for a dual degree in computer science and finance. And of course, I love Bitcoin. People know me as the Bitcoin guy everywhere. This podcast will entirely be all about me reporting what I think to be some newsworthy events in the world of cryptocurrency. Everything will be reported with my opinion on the matter. I eventually aspire to have some people on the show, so without wasting any more time, let's get right into the first bit of news for today. I found this article from CoinDesk. A fake Tor browser has been stealing Bitcoin, quote-unquote, for years. Hackers have been distributing a compromised version of the official Tor browser that's packed with malicious tools used to both spy on users and steal their Bitcoin. The flaw was discovered by researchers at IT security firm ESET. The Trojanized Tor has apparently resulted in a relatively small amount of Bitcoin being lost to date, with funds being taken from their addresses by swapping when users try to pay on darknet markets. In an announcement emailed to CoinDesk on Friday, ESET's senior malware researcher, Anton Cherepanov, said the research has identified 3 Bitcoin wallets used by the hackers since 2017. Oh, for 2 years. Wow. Each such wallet contains a relatively large number of small transactions. We consider this a confirmation that these wallets indeed were used by the Trojanized Tor browser. At the time the research was completed, the 3 wallets has received 4.8 Bitcoin, worth around 39 grand at press time, though ESET said the actual amount stolen would be higher as wallets for the Russian payment service QIWI are also targeted. The hacking campaign has been targeting Russian-speaking users of Tor, a network designed to keep identities hidden to avoid tracking and surveillance. The cybercriminals behind the fake Tor browser have been using forums and payspin.com to distribute their offering as the official Russian language version of the app. Their goal was to lure language-specific targets to a pair of malicious yet legitimate-looking websites, said ESET. On the first website, the user receives an alert that the Tor browser is out of date. Even if not true, visitors who are duped by the message are then redirected to a second website with an installer for the fake app. Once installed, the malware-laden browser enables its creators to know what website a user visits, to change the data on the visited pages, and grab the content of data forms. Oh, so they're just like hijacking the buy button to make it go to their Bitcoin wallet instead of the Bitcoin wallet of the dark web market sellers. That's actually kind of clever. While the hackers could potentially display false information to users, the browser has only been observed to change the wallet addresses for the purposes of stealing Bitcoin. Yeah, that's all I did. That's pretty clever. I guess that's like targeting. It was targeting people. They said it was targeting people that didn't understand Russian or English or stuff like that. Kind of cool. Another article I have here is Binance hikes leverage up to 125 times for a launch of Bitcoin Tether futures. Now that seems risky. I would never trade on margin. I just don't like touching people's money that isn't mine, especially trading with people's money that isn't mine. I'd rather lose my own money than lose someone else's money. Binance's futures exchange is raising leverages to 125 times with the launch of Bitcoin Tether contracts today. The cryptocurrency exchange first announced its futures platform in early July, at the time of hinting it would allow 20 times leverage. Now future traders can now choose leverage positions between 1 times and 125 times, it said Friday. We have seen an increase in institutional participation in trading, and they are flocking to Binance futures, said Binance CEO CZ in a statement. The market has been demanding a product with superior stability and performance, and now we are providing one. Oh. So you just have a slider of how much leverage you want. Okay, maximum position current. Okay, no, that's just for what they entered in. Wow. Max leverage positions on Binance now exceed crypto exchanges BitMEX's futures leverage positions, which top off at 100 times for some contracts. Noted economist and crypto skeptic Norio Rubini has previously argued that in providing such high leverage, exchanges are exposing traders to too much risk. You think? I mean, dude, 125 times. That's a lot. I just can't comprehend. If you lose, imagine the margin calls if you mess up that bad. Oh my God. Wow. Binance said its Bitcoin futures contract provides a built-in hedging tool to help traders manage that risk. Further, the exchange said it's providing an insurance fund an insurance fund that helps to limit the chances of auto deleverage. The announcement comes amidst a tightening competition in the Bitcoin futures space. Yeah, because didn't Bitcoin futures contract launch like 2 weeks ago, week and a half ago? Intercontinental Exchange, backed Bitcoin futures exchange launched this September. Although the exchange's initial volume disappointed critics, the exchange has already conducted its first block trade for 2 institutional investors. Well, yeah, when backed futures first launched, the volume was disappointing because nobody wanted to buy at the time. It wasn't a good buy. That was when they launched. It was at like what 10K, I'm pretty sure, and that now it's at 8150. Yeah, I mean I do see it going a little bit lower than that, but they were just waiting for a good entry. I don't know if these institutional investors are probably going for longs or whatever, but yeah. About 125 times leverage. That's insane. Just going to move right on to the next article I have lined up right here. With another one from CoinDesk. With 18 million Bitcoins mined, how hard is it to find that 21 million limit? I actually tweeted about this exactly when the 18th million Bitcoin was mined. I tweeted about it on Twitter. If you don't follow me on Twitter, it's at Jamie Dabauskas, JamieDubauskas. Yeah, it's kind of exciting. I was just sitting in the campus diner, about to eat some dinner. I'm like, before I'm eating, my friend's like, what are you doing? I'm just sitting there on my phone, just waiting for that 10-minute block time to refresh and waiting for my phone to refresh to see that 18 millionth Bitcoin being mined. I wanted to see it, screenshot it, and tweet it immediately, just so I was the first one to that hashtag 3 million left that Anthony Pompliano started. He started that hashtag on Twitter, I'm pretty sure. So into the article. In a matter of hours, the 18 millionth Bitcoin would have been mined, and the world's first cryptocurrency would draw one step closer to its hard-coded cap of 21 million coins. So for those of you who are listening who do not know what that means, Bitcoin has a cap of 21 million coins. It cannot be over that limit. And every time a block is quote-unquote mined or confirmed by a transaction, there's a reward that goes to the miners. That reward currently is 12.5 Bitcoin. And so that reward is given out every 10 minutes. That's how much a block is generated. A block is generated every 10 minutes. So 12.5 Bitcoin is released every 10 minutes. And eventually, there's what's every two-ish years, there's what's called a halvening. So that block reward is cut in half. So the next halvening is in March of 2020. That's going to cut the block reward to 6.25 Bitcoins. And eventually, the amount of Bitcoin being mined, it's going to be like a curve like this, going closer to that horizontal asymptote of 21 million top. The last Bitcoin that will be mined, I'm pretty sure, it says in here, you have 120 years to do so. It'll be like the year 2140 when the last Bitcoin will be mined. Most likely, I will not be alive then. Who knows? Maybe there's some good, medical drugs or something like that. It can make me live 140 years, but Yeah. Back to the article. The pie is shrinking. This milestone gives people some simple math to raise awareness about where we are at in the Bitcoin mining process, says Alex Alderman, CEO of Bitcoin rewards platform Lolly. Oh, Lolly is a cool thing. You click right here. I'll log in later, but like it has like a Chrome extension where you buy from any online retailer and they give you some Bitcoin back. It's kind of cool. It's almost like a rewards program. They're just trying to get Bitcoin out into the mainstream media. That was pretty cool. But don't you worry, you have 120 years to do so. Next 3 million Bitcoins will progressively slower to mine as a result of the block reward halvings, which occur every 210,000 blocks, or roughly every 4 years. Oh, I was wrong. It's 4 years. But 210,000 blocks. It's like 2-ish years since the previous one, I'm pretty sure. No. I'll look it up later. Every 210,000 blocks and reduce new Bitcoin supply by 50%. The final Bitcoin is expected to be mined in 2140, or is it? It seems blasphemous even to go there given Bitcoin's value proposition as digital gold, but outsiders foresee a day when the 21 million cap might come up for debate. Oh, so they want to increase it? That's the whole point of Bitcoin, to let it a fixed amount of coins. So it's a deflationary currency as opposed to an inflationary currency like the US dollar. Eventually, once there are no Bitcoins left to mint, miners will rely solely on transaction fees, which are paid by users to transfer coins through the blockchain. This change gives cause for concern to some who view Bitcoin's block subsidies as integral to Bitcoin's incentive system. To skeptics, this can undermine the structure that motivates miners to record validated transactions in the ledger. All of your assumptions about incentives, risk, and value go out the window, said Angela Walsh, a research fellow at the University College London Centre for Blockchain Technologies. Please take the blinders off and stop assuming that everything will still work well once everything goes to a pure transaction fees system as opposed to a block subsidy. Currently, with each block, miners get a subsidy of 12.5 newly created Bitcoins worth roughly about 100 grand plus any additional transaction fees, which normally don't total more than 1 Bitcoin. Along the same lines, Paul Brody, global innovation leader for audit firm Ernst & Young, said Bitcoin's limited supply could limit the cryptocurrency's utility as a global reserve currency. Pointing to situations such as the Great Recession where monetary policy interventions were needed to lift the U.S. out of economic turmoil, Brody said, if Bitcoin were to become a substantial part of the global monetary system, we would need to address the hard supply cap because a lot of economists agree deflationary systems are not necessarily the best thing. Never heard of that. What next? Both Walsh and Brody suggest that Bitcoin's 21 million supply cap might one day be subject to change. We need to acknowledge that the 21 million cap is aspirational, said Walsh. If people decide to change the supply cap for certain reasons, and enough people make that decision, the system will move into it. It's aspiration, not reality. While technically feasible, a change to the supply cap would almost certainly be a non-starter for Bitcoin users who cherish its gold-like properties. Indeed, a Bitcoin's code has been long governed by a community with a bias toward retaining the coin's original features as created by its pseudonymous founder Satoshi Nakamoto. Unlike Ethereum, the world's second largest cryptocurrency, the Bitcoin blockchain has rarely seen backward incompatible system-wide upgrades changing core code features. In the rare instances it has, the Bitcoin community has gone through fierce governance disputes, such as the infamous scaling debates of 2017, which centered on a potential increase of Bitcoin's block size. The philosophical rift ultimately resulted in the creation of Bitcoin Cash in August 2017. Before I continue, I just want to say right now, Bitcoin Cash, don't agree with it. It's a dumpster fire. It is absolutely a dumpster fire. What's happened? Bitcoin forked into Bitcoin Cash, which has like bigger block. They have bigger block sizes on Bitcoin Cash, while Bitcoin is trying to solve scaling another way. And then Bitcoin Cash, they had an internal dispute, and they forked again into just Bitcoin Cash. I think it's Bitcoin Cash ABC, and then Bitcoin Cash Satoshi's Vision, or Bitcoin Cash SV. I feel like one of those are going to have another dispute, fork again. It's just going to be a dumpster fire over there. I mean, Bitcoin has the industry. It was the first. Bitcoin was the first. It's always going to be the first. It's always going to be the most valuable because it was the first. People might say I'm a Bitcoin maximalist, and kind of, yes. But I also see some value in some of the altcoins too. There are a lot of cool projects over there, like Ethereum. Ethereum is really cool. They're trying to move to proof of stake versus proof of work, which that's the way of how the transactions are being confirmed. Proof of work is what Bitcoin currently is. You have to have a miner, and you have to solve problems, and use that work to confirm the transactions. As of proof of stake is you just have a stake in the blockchain, I'm pretty sure. It's really complicated. I know a little about it, but proof of stake is what EOS is like. EOS is like the ultimate proof, or EOS is delegated proof of stake, I'm pretty sure. I'm just going to go back to the article right now. In rare instances, it has the Bitcoin. Oh, I already read that. Still a prospective hard fork that would change Bitcoin's 21 million coin supply cap is conceivable, if perhaps heretical. It's not a given that Bitcoin has to stay at that 21 million hard limit, said E.Y. Brody, who, it should be noted, is building enterprise applications on top of rival chain Ethereum. There is a governance mechanism to permit changes in Bitcoin. If the community agrees, that'd be good. On the other side, even so, Bitcoin advocate and author Andreas Antonopoulos stressed that governance drama surrounding Bitcoin's supply cap is nothing to lose sleep over, especially since Bitcoin's transition to a purely transaction fee rewards model will take 120 years. So I guess he's taking the procrastination card. He's like, you don't need to worry about it. Got 120 years. I mean, I kind of believe that too. Because as of right now, people are going like a gold rush for Bitcoin because everyone knows, or the people who are in Bitcoin knows, there's only 21 million. And that's a hard cap, and that's it. That's what kind of goes off of the basic supply and demand. As you learn in basic microeconomics courses, that's what pretty much drives the entire price of Bitcoin as of right now. Maybe it might be a different drive of price of Bitcoin once we reach that just transaction fees instead of reward fees. Antopoulos added that from the very launch of Bitcoin in 2009, mining was always a marginally profitable endeavor, never intended to stay constant. Mining rewards dynamically adjust based on the network. It's a very complex economic environment, and it's not as simple as people think, he said, adding, there are a half a dozen variables that determine miner profitability right now, including the cost of electricity, their access to bandwidth transaction, the block subsidy, the transaction fees at the time, the Bitcoin price, their local currency exchange rate, the type of equipment, and how efficient it is at converting electricity into mining. That is a lot of variables, holy moly. As such, Antonopoulos says the concerns surrounding the transition from block subsidy to purely transaction-based block rewards are grossly overblown. Nothing magical happens when block subsidy drops to zero, he said. It's a very gradual and predictable change that happens over a period of 120 years, and it's already happening and every day miners make their decisions. The miners have the vote over the whole blockchain, may add. While the 18 millionth Bitcoin might not be the best reminder of the ongoing reality of a limited supply cap, the next upcoming milestone on Bitcoin's horizon assuredly will, viewing the next Bitcoin halving as a far more notable event in Bitcoin's history. Venture capitalist William Moigar said, in my opinion, the 18 million milestone is not that significant in relation to the next halving, which occurs May 2020. On that date, the block subsidy will go from 12.5 to 6.25 Bitcoins. And it's the article right there. Well, I disagree with that. I think the 18 million milestone is a big deal because the next time we hit another million is what, 19 million milestone, which is gonna be a while out. It's gonna be after the halving. It's gonna be after something else. I don't know. It might be like two. I'm just giving hard guesses here. 2 to 4 years. And this milestone happened for me on Friday. Happened on Friday. That was it's almost like that. Oh, where were you when you 18 million bitcoins were mined? Oh no, just sitting in the diner eating some food. Oh, whatever. Here's another article I thought was pretty cool from CoinDesk again about Fidelity digital assets being open to all qualified investors. Fidelity's a big corporation. That's gonna be some big adoption right there for Bitcoin. Here. Fidelity Digital Asset Services, or FDAS, is now engaged in a full rollout of its custody and trading services, expanding from the limited trial users in the platform's final test stage, according to a Financial Times interview. The business had initially been expected to be open in the first quarter of 2019. In an interview with Fidelity Investments CEO Abigail Johnson, the Financial Times said, Fidelity started adding clients in the first quarter and is now engaged in a full rollout of its custody and trading services for digital assets, a boon to what is a fragmented and complicated industry, Mrs. Johnson told the Financial Times in a rare interview. CoinDesk reported in February that Fidelity's crypto custody and trading services platform was being tested by a limited number of clients, including hedge funds, family offices, and financial advisors. The $2.8 trillion asset manager, oh my God, that's a lot, is one of the first established traditional financial institutions to offer digital asset custody services, as other peers are still waiting to see how the crypto industry comes into formation. While there are several platforms providing similar services, Johnson said Fidelity's large client base and network were distinct advantages. Yeah, that is a big advantage because that's a big bank. A lot of just old regular Joe Schmoes use Fidelity. Not that there's anything against it. I'm just saying they have a large client base. Yeah. Coinbase, for example, is still a company that most people have never heard of, and they don't have the existing relationships with the independent advisors, Johnson told the Financial Times. That crypto exchange, looking after billions of dollars of digital assets, was approved by the New York State Department of Financial Services and launched its custody services for third parties last October. On crypto in general, Johnson said, if you're either interested or technically adept, then it's not really that big of a deal. Everybody's downplaying it. I feel like the past few articles, everyone's downplaying all these big, what I feel to be big milestones in Bitcoin adoption. I'm excited. I mean, I like this, but like, everyone's downplaying it. I don't like that. Yeah. I think this is big. This is definitely a big milestone. I remember Coinbase Custody, when they launched, they had, I think, like a couple $1 billion, and then within a week they doubled it. And they tweeted it, and they're like so happy about it. I'm like, oh my God, I like the tweet. I was amazed because, I mean, I just imagine a couple $1 billion and they double their custody services in a week or over a weekend. I'm pretty sure it was. That's just crazy. Got to get that institutional money back. You got to pump that institutional money into Bitcoin to pump that price up higher. Got to get that. I'm just gonna move on to the next article I have here by Cointelegraph. HTC launches the Exodus 1S, the first Bitcoin that can run a full Bitcoin node. Before I jump into this, if you don't know what a Bitcoin node is, it basically is another place where you can. It's a software that you can use to verify. You don't verify transactions on it. It just kind of like downloads the entire blockchain, which is a couple hundred gigabytes, I think. So that's gonna have to be that phone's gonna have a lot of storage. And it just maintains the network, I'm pretty sure. Yeah. If I'm wrong, correct me, please. But and Bitcoin node maintains the Bitcoin network. And it just downloads the entire blockchain. Taiwanese electronics giant HTC has launched its new smartphone, the Exodus 1S, enabling users to run a full Bitcoin node on mobile. First smartphone to support a full Bitcoin node. In line with an announcement in May 2019, HTC launched the Exodus 1S at the Lightning Conference in Berlin on October 19th and started selling the first devices during the event using the Lightning Payment Network. The firm said in a press release to Cointelegraph, the new Exodus 1S is a lower-cost version of the pioneering HTC's blockchain-powered phone Exodus 1, which recently added the support of Bitcoin Cash, priced at €219 or $233. The new device is available to buy using Bitcoin, Ether, Litecoin, Binance Coin, and Bitcoin Cash, the firm said. Apart from featuring buy, sell, send, receive, trade, and lend and borrow options, HTC claims that the Exodus 1S is the first ever smartphone capable of running a full Bitcoin node. The product will initially be available for users in Europe, Taiwan, Saudi Arabia, and the UAE, while other regions such as Taiwan, Switzerland, and Germany will see launches at a later date, the firm noted. Phil Chen, the decentralized chief officer at HTC, stated that the full nodes are the most important ingredient in the resilience of the Bitcoin network, noting that by launching the Exodus 1S, the firm has lowered the entry barrier for any person to run a node and participate in the global network. Exodus 1S's predecessor, Exodus 1, and the first native blockchain phone was announced for pre-sale on October 23, 2018. Oh, so it's been a year. It's been a year since the previous blockchain phone was released, and now they're releasing like an updated version. I think it's way cheaper, I'm pretty sure, the new one. Yeah. So in mid-September, decentralized offline crypto sales firm PundiX introduced its blockchain smartphone at the IFA trade show in Berlin. On October 8th, South Korean electronics giant LG was reported to be developing its own blockchain phone in response to Samsung's Clayton blockchain smartphone. Oh my god, I can't even pronounce that. But from this article, the vibes I'm getting from this article is there is a lot of all these electronic giants are now making blockchain phones. You know what I'd like to see? I'd like to see Apple make a blockchain phone, because this is still early, like, the first blockchain phones, but like, I feel like once Apple makes a blockchain phone, then it's really like turning up the heat for Bitcoin and other decentralized assets in basically the future of money, as I say it. So yeah, I think that's cool. Only $233. That's like a quarter cheaper. That's a quarter of the price of the new iPhone, the new $1,000 iPhone. I can definitely see billionaires and multimillionaires in the crypto space buying not just one of these phones, but just like a handful of these phones. Just have them all run the Bitcoin full node. Just have them locked up in security boxes, almost like how the Winklevoss twins, how they secured their Bitcoin. I read in the Bitcoin Billionaires book by Ben Mesrich. I read that book, and it described the Winklevoss twins, how they hid their Bitcoin was like on flash drives. No, they put parts of their private key on pieces of paper and cut up the pieces of paper into like equal parts, and then put each tiny part in different like lock boxes in different banks around like a couple of states, which is, that's a little far, but like if you're storing billions and billions of dollars like what they're doing in Bitcoin, then for their personal reasons, I guess that's okay. It just seems a little complicated, but I can totally see a bunch of people buying a bunch of these phones, like 2 to 3 phones per person. They're not making these phones for one per person. Maybe for the mainstream media, but for like the really serious guys in crypto, they're definitely going to buy 2, 3, or 4 of these phones, store them around. So I'm going to go into the next article I have here, my last article. I thought it was pretty interesting from this weekend. The New York District Court postpones Telegram's TON hearing in 2020, or to 2020. I know Telegram is a messaging app, for those of you who don't know. And Telegram is a messaging app. Kik is a messaging app. Telegram and Kik, they're trying to make their own, like, currency for... I don't even know. I think it's just like a blockchain-powered messaging app. I think that's what they're going for. They're going for, like, tipping, I think. Maybe they're going for tipping. Maybe they're going for, like, I don't know. But, like, all these corporations, especially Facebook with Libra Project, but all these corporations nowadays are just, like, think they can print their own money. I mean, I know it sounds hypocritical because Bitcoin exists, but the thing is, Bitcoin was created by Satoshi Nakamoto, but nobody knows who he is. I'm pretty sure it's a group of people. It's not one person. There's no way one person thought of this idea, because he has to be a freaking, like, genius to come up with Bitcoin, that concept. But all these corporations nowadays think they can just print their own money and issue it. I don't really like that. It's almost like a quick cash grab in my eyes, especially from Facebook. Facebook is just shady overall. Libra Project looks shady as hell. The United States District Court for the Southern District in New York has postponed the hearing regarding the Securities and Exchange Commission's injunction filing against Telegram Open Network, or TON, and its Gram token to February 18th to February 19th of 2020. So that they're just stopping this, postponing it, because they don't know what to do with it. A lot of people in the government don't really know what to do with Bitcoin. I feel like we should appoint some, like, really tech-focused guys that are not in it just to make money or get paid by Facebook, but are in it for, like, the forward development of Bitcoin. I think we should have some guys in government like that. As Cointelegraph reported recently, following Telegram's counterclaim on October 16th, where the firm argued that its native crypto is not a security and the preliminary injunction should be denied. The SEC has responded with a new filing in the New York court on October 17th. According to the TRO filed on October 11th, Telegram should have a court hearing in New York on October 24th. Yet the latest court order shared with Cointelegraph on October 19th stated that the hearing will be held in the February 2020. They're giving them it is ordered that the defendants should not offer, sell, deliver, or distribute quote unquote grams, or that's the currency Telegram's trying to make, to any person or entity until the conclusion of the hearing scheduled by the court for February 18th and 19th of 2020. The hearing. Expect upon further order of the court or agreement of the parties at the hearing, any party may move the court for continuation or dissolution of this order. Recently, the SEC has claimed that not only did Telegram violate the U.S. securities laws during its initial coin offering, but also is seeking a preliminary injunction to prevent Telegram from further violations. The SEC stated that Telegram's proposal to deny the injunction would allow them to continue to violate regulations after 5 months and put the burden on the SEC to seek another temporary restraining order. The SEC intervened just before TON's launch. SEC has announced an emergency action against Telegram on October 11th, just weeks before the planned launch of the Telegram Open Network. Telegram asked a U.S. court to deny the action, prompting a response from the SEC seeking a preliminary injunction. While Telegram has proposed to postpone the launch of TON, a force majeure clause in the purchase agreement for TON's native Gram tokens has made investors concerned that Telegram could abandon its obligation to return funds from Gram token sales in the event of a delay. Telegram investors must decide whether to extend the TON launch by October 23rd. Should such a proposal pass, TON would tentatively launch on April 30th. They're pushing out months from now. But I think the SEC, the only reason the SEC is going after Telegram and going after Kik and especially going after Facebook for their cryptocurrency, is because they can. They're able to go after them because they're corporations and they exist. The people who created Bitcoin are anonymous. You can't stop Bitcoin. People around the globe run nodes of the Bitcoin blockchain and run mining rigs and confirm transaction and this and that and this. You can't really stop that because it's global. You can't have one government say to the rest of the world, hey, you can't have Bitcoin. People are just going to keep it running. They're just going to, who cares? You can't stop me. We're making money. Yeah. So I think that's the only reason they're going after these people is because they can, because they're able to. I mean, technically, if they really wanted to go after Bitcoin, they'd probably go for the lifelines and go for the exchanges like Coinbase and Binance. Binance is launching a U.S. exchange, which I think should be cool because it'll introduce some competition. Hopefully, that prompts Coinbase Pro and Coinbase to lower their trading fees because 0.5% for maker-taker orders for us small guys like me. I'm not an institutional investor. I don't have millions of dollars to trade. I'm a kid. I mean, I'm recording this in my dorm for Christ's sake. So, yeah, those are the 6 articles I wanted to share with you guys today. That's all I have. That's all I have for today. Come back. I'm gonna do this podcast every Sunday, so come back next week. And adios.